Ladies and gentlemen, good day, and welcome to the Q4 and FY25 earnings conference call of Power Mech Projects Limited, hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Deepak Saha from Nirmal Bang Institutional Equities. Thank you, and over to you, sir.
Hi everyone, good morning. On behalf of Nirmal Bang Institutional Equities, I would like to welcome you all to the 4Q FY25 earnings call of Power Mech Projects Limited. The management today is represented by Mr. N. Nani Aravind, CFO of the company, and Mr. S.K. Ramaiah, Director of Business Development. I will now hand over to the management for their opening remarks, after which we will open up the floor for Q&A. Thank you, and hand over.
Thank you, Pooja and Deepak. Good morning, everyone. I'm Nani Aravind, CFO of the company. I have with me Mr. S.K. Ramaiah, Director of Business Development. Unfortunately, Mr. Rohit, President, Business Development, is unable to join us today due to an unexpected travel and meeting commitments. I take this opportunity to welcome you all to our Q4 FY25 earnings call. The performance for the fourth quarter and full financial year FY25 continued in line with our set targets. For Q4 FY25, we reported a total income of 1,870 crore, marking a 43% increase over 1,312 crore in Q4 FY24. EBITDA stood at 233 crore, up by 46% from 160 crore last year, and PAT came in at 117 crore, registering 39% growth compared to 84 crore in Q4 FY24. The EBITDA margin improved slightly from 12.2% to 12.5%, owing to better cost control, while PAT margin marginally decreased from 6.4% to 6.3% due to increased finance costs and higher minority interest costs. For revenue mix for Q4, in terms of revenue mix for Q4 FY25, the mechanical business contributed 290 crore, a 65% increase over 176 crore in Q4 FY24. The civil segment, including railway, water distribution projects, contributed 980 crore compared to 725 crore in the same period last year, reflecting a 36% increase. O&M revenues rose to 533 crore, up by 51% from 354 crore. The electrical business saw a significant increase, reaching 25 crore versus 6 crore during last year, marking a 315% jump. The mining business contributed 25 crore, lower than 41 crore in Q4 FY24, showing a 40% decrease. Other income stood at 17 crore compared to 10 crore in the previous year. The revenue split for the quarter was 97% domestic and 3% international, while the contribution from power sector remained at 53% for the quarter, and with non-power sector accounting for the remaining 47%. For the full year of FY25, we reported a total income of 5,279 crore, a 25% increase over 4,234 crore in FY24. EBITDA for the year stood at 649 crore, growing 24% from 524 crore, and PAT was 327 crore, an increase of 32% over 240 crore in the previous year. On a full year basis, EBITDA margin declined slightly from 12.4% to 12.3% due to increased overhead costs, whereas PAT margins improved from 5.9% to 6.2%, driven by lower tax expenses and higher other income. So the revenue mix for the 12 months period, mechanical business contributed 898 crore, showing a 30% growth over 692 crore in FY24. The civil segment, including railway and waterworks, contributed 2,439 crore, up by 6% from 2,308 crore. O&M revenues rose significantly to 1,746 crore from 1,109 crore, recording 36% growth. Electrical business revenue stood at 67 crore, up by 26% from 53 crore. Mining revenues were 84 crore, a sharp increase from 44 crore in FY24. Other income rose to 45 crore from 25 crore. So the overall business split for FY25 was 95% domestic, 5% international, with 59% of revenue coming from the power sector and 41% from the non-power sector. The financial parameters of the company is concerned with better deployment of capital and improved operating margins. We have also witnessed an enhancement in our return on equity, which increased from 14.22% in FY24 to 16.26% in FY25. However, return on capital employed saw a marginal decline from 24.16% to 23.28%, primarily due to delays in receivables realization in the water division, which necessitated higher utilization of working capital borrowings. We expect this to be a temporary impact, and with the anticipated normalization in collection and execution, return on capital employed is likely to improve significantly in the coming quarters. Other key developments during the period include the operating cash flow, which remained neutral, nil, primarily due to the pending realization of receivables in the water division. We are actively engaging with the clients to expedite the certification and clearance processes and are confident of realizing the outstanding dues in the coming months, which will help restore the positive operating cash flow. Net current assets days, excluding cash and cash equivalents, have increased from 121 days in FY24 to 128 days in FY25 due to delays in certification of the water works and delays in realization of receivables, resulted in the increase in the current assets of the company. And on stabilization of the MDO business from 2027 onwards, we can expect a significant improvement in the net working capital days. The gross debt and net debt remained controlled despite delays in certain certification of water bills and delays in realization of receivables. As on 31st March 2025, the gross debt is 641 crore and the net debt stands at 48 crore. The debt equity ratio as on 31st March 2025 stands at 0.33 times. Regarding with reference to the order book is concerned, during the FY25, the company has secured orders worth of 6,437 crore. The order backlog as of 31st March stands at around 58,258 crore after excluding FGD orders of rupees 4,264 crore. The backlog is around 53,994. Further excluding the two MDO projects, the executable order book is 14,387 crore. We continue to actively pursue tenders and are targeting to secure 10,000 crore of new orders by March 26. During FY26, we anticipate a significant increase in order inflow, particularly from the power sector, across segments such as O&M, mechanical, civil construction, and BOP EPC. As on date, we have already secured orders worth of 972 crore during the Q1. Our strategic focus will remain on high potential areas, including industrial plant operations and maintenance, railway and water infrastructure, as well as MDO projects. All our existing projects are progressing well and are on track as per the planned schedule. For FY26, we have set a revenue target of 6,500 crore, which is subject to the pace of traction in MDO business. EBITDA margins expected to remain consistent with FY25 levels. We are confident of achieving 25% year-on-year revenue growth. Margins are expected to remain stable, with a potential upside depending on the contribution from the mining segment. The order book outlook for the current financial year also appears comfortable, supporting our growth trajectory. Power Mech is well positioned to demonstrate execution and conversion in the range of 40% of its opening order book annually. Additionally, the MDO business is ramping up steadily, and we expect both O&M and MDO segments to drive significant growth in the coming years. So, with reference to our MDO business is concerned, our MDO business is progressing steadily. At the KBP Mining Kotre Basantpur project, we achieved a key milestone with the release of 564.16 hectares of notified forest land by the State Forest Department in July 24. Tree cutting for the first year was completed by March 25. Equipment mobilization has been completed and mining operations begin on 15th April 25. As of now, approximately 1.7 lakh cubic meter of overburden removal has been completed and coal production is expected to commence from Q2 FY26. At the Kalyaneshwari Tasra project, OB removal and coal dispatch operations have been ongoing since January 24, with approximately 6.4 lakh tons of coal dispatched to SAIL as on 30th April 25. The project received environmental clearance for a 3.5 million tons washery in October 2024. Design consultants have been appointed for railway slidings and washery development. Engineering and vendor finalization activities are in progress. Site mobilization is underway. The phase 1 R&R colony construction on 4.5 acres is completed, and handover to project affected families is in progress. Approvals for phase 2 colony construction over 41.11 acres are currently under review. So while SAIL's current coal offtake is below the plan due to limited external washery capacity available outside, we are actively working to resolve these constraints and ramp up the mining production. So with this, I now request Mr. Ramaya Garu to update us on the key business development initiatives and future outlook of the company.
Yeah, thanks, Arvind, for your initial introduction and bringing out all the financial numbers. And thank you our investor community. I think Arvind has given us key features of the company's operations and the finance, and then the order backlog, and then the revenue and all. Some of the key aspects I would like to develop on is that in the quarter 4 particularly, there were some key important orders we have secured. Adani Power, Mirzapur, about 424 crores for the civil and structural portion of 2 into 800 megawatt units. Then the Kodarma, another 2 into 800 megawatt project coming up by DVC. BHL is the EPC contractor, 579 crores for the civil and structural work. Then there was a major breakthrough in NHI for the Devgar bypass, 49 kilometers of HAM project, 972 crores. Then there was a scope expansion of the government medical college scope which we are doing in Uttarakhand, that is about 231 crores. Then other major jobs which we have secured in this current year are Kaigan Nuclear Power Corporation. First time we have taken the 2 into 700 megawatt 5 and 6 unit stage, 563 crores. Then South Central Railways, 107 crores. Then Nigeria, Dangote, first time we have taken a major O&M job, a 2-year long-term O&M contract for the plant which commissioned captive power on 109 crores. Then Coastal Energy, Tuticorin O&M, 1,001 megawatt, 114 crores. Then GMD Factory Motor O&M 2 into 125, 227 crores. And then Vedanta Talwandi 3 into 660 megawatt, a 5-year O&M. This is one of the major contracts we have secured in O&M, 951 crores. For this is now as far as the business outlook is concerned, there have been key breakthroughs in the major orders which were secured in the O&M, and then particularly Vedanta, Adani, the new investments are making for the huge power sector investments, Nuclear Power Corporation which is coming with new projects. Then a significant improvement in the export orders, particularly in the O&M side and the maintenance side of the jobs which were taken in Middle East and Nigeria. That is 324 crores. There is an improvement over the last year, whatever we have done. Then the BHL also is coming with a lot of EPC contracts, and there are obviously the opportunities are coming with BHL power sector, then roads, and then the steel segment will come up slowly. Then the major features are the O&M. There seems to be uptick in our operations, both in ordering and also as in revenue and all. In fact, the order backlog on the O&M has gone up significantly from 2197 crores to 2749 crores compared to last year and this year end. Then, of course, there is an adjustment on the FGD jobs which are slow moving, which is not taking shape because of various factors involved in that. That is about 4,263 crores from the Adani side. And then the civil side, there is a significant improvement in the order backlog from 7814 crores to 8472 crores. And then O&M I have mentioned. Electrical, of course, the business is slowly coming down for the obvious reasons. We have taken a business call. And the business is continuing to be driven by the domestic sector with 98% of the work, with about 54% of the, the domestic is almost 98%. International is about 2%. Then power sector is about 60 and 40%. Non-power sector is 40%. Then with MDO, the backlog has gone up from 57,053 crores after adjusting 53,994 crores because of the FGD order adjustment. Then, of course, there are certain things on the market side we have to understand is that some little bit of order backlog initial last year was due to the lot of elections process which was there for the general elections and the state elections. That was why many of the tenders were postponed. And later on, it has picked up in the second, third, and fourth quarter. Of course, that election period, there was an obvious growth in the market. That is one of the things. But as far as the general business environment is concerned, is that power sector is taking a big shape with about ongoing contracts of 2 lakh crores. And new investments are expected about 4.5 lakh crores because of the ramping of the capacity from 220 gigawatts to almost 300 gigawatts. Then railways as usual, and then roads, the investment continue to go with the same pace. And there is an improved opportunities in the case of Middle East and then in the West Africa. That is where we are trying to give attention for the new investment which is coming in the power sector there in a big way. This is as far as the general thing. And then we are at present looking at a total opportunity for the current year about 30,000 crores. And that should be a combination of the power sector because in the case of power sector, I would like to bring out certain key features. If you look at it overall for the last 1.5-2 years, total ordering which has been done is about 32,420 megawatt worth a value of 1,96,705 crores. This is a significant order input into the system, EPC orders and then BTG supply orders and then certain other miscellaneous orders which has been placed by various customers. And then major customers which have placed orders on BHL and also L&T are Adani about 10,920 megawatts and then NTPC about 11,580 megawatts. And then DVC 3,200 megawatts, NLC 2,400 megawatts, and their orders also come to BHL and L&T from Mahajanko, Koradi 1,600 megawatt, Singareni 800 megawatt, Ukai GSECL, Gujarat State Electric Corporation Limited 800 megawatts, and then Chhattisgarh State Company, Power Generation Company 1320 megawatts. Therefore, BHL is flush with orders. That is one of the positive things. Obviously, they have got total ordering of BHL has got a total ordering of something like 29,420 megawatt for 1,69,182 crores. L&T has secured 2 major orders at Nabinagar and Narwara, 4,000 megawatts, about 27,523 crores. Total Adani orders on BHL is about 31,270 crores, mainly BTG supplies and also BTG supplies for about 10,920 megawatts. And then total NTPC orders on BHL is 7,580 megawatts for 58,090 crores. Therefore, total NTPC and BHL orders on BHL, NTPC and Adani orders on BHL is 89,360 crores. And BHL for the last year has secured 92,534 crores and with a backlog of 1.95 lakh crores. For L&T and BHL are the major power sector players. Therefore, this will, if you look at the present and future, the annual capacity reduction should go into 8,000 to 10,000 megawatts, offering significant opportunities. Then O&M opportunities will increase about 1,200 to 1,500 crores per year only in the new capacity reductions which can come up. And CEA, Central Electricity Authority, has planned a commissioning program of 16,760 megawatt in the current year. Of course, last year there was a setback in the commissioning. All those projects are going to be commissioned in this year. And then plants under construction is more than nearly 33,000 megawatts. Therefore, apart from that, because of the impetus on the capacity and thermal power to manage the grid stability, there are ongoing plans and development plans for various power developers and all up to 43 to 44,000 megawatts that can entail a future investment of nearly 4 lakh crores. Therefore, power sector is really booming. It will go up another 3-4 years in terms of ordering, and then in terms of capacity, it will go to 2032. And then as part of the national infrastructure pipeline, we have seen the continued focus on the roads, railways, infrastructure, metro jobs, water systems, etc. That is how we look for that. The opportunities will continue to be more and more available for the company. And then the O&M is a new shining aspect in our operations and all. That is what I would like to say. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yes, sir. Sir, a couple of questions on the FY25 number first. So, if you see the mix has improved in favor of O&M, but we know, and civil hasn't grown, civil has grown less than the company growth. So, obviously there should be some level of margin expansion, but we don't see it coming. If you could highlight the reason. Second is on water projects and the receivable expansion. This is called out by a lot of companies. So if you could tell us exactly what is the problem in the water sector and what will be the due course of correction there. So, and then I have another 2 questions which I'll take after.
Yeah. Thank you, sir. With reference to the EBITDA margin, even though revenue, O&M and other operations increased also, there is no positive movement in the EBITDA margin. Why it is likely the less cost is mainly during the year we received major orders from the power side. So we started the new plant, new projects. The establishment cost will be more at the initial stage, so which will be recovered in the subsequent period. And moreover, this water division, we anticipated more, we planned 678 crore of turnover, whereas we achieved only 70% of the targeted number, mainly because of the Jal Jeevan Mission, where we are executing projects in water in UP government. The project timelines for Jal Jeevan Mission has been expired, and since November, there is no certification on these water projects are concerned. And this is basically 50% fund is allocated from the central government and 50% from the state government. Due to Kumbh Mela project planned at UP level, so the state government at both central and state, they have not allocated any funds during the Q4. So hoping that this quarter we are getting the funds, so that there is a realization pending from receivable of around 210 crore of water division. There's WAP uncertified portion of around 215 crore. Total around 415 crore value of 425 crore value is pending from the certification as well as the receivable from the UP government is concerned regarding Jal Jeevan Mission is concerned. So we are hoping that this quarter we will expecting some allocation of funds from the central government and the state government. We'll recover that money in this quarter.
Okay. So to the first question then, why are you not calling out margin expansion in FY26?
FY26 also we are expecting new orders from the power sector. So more or less we are maintaining at the same level of EBITDA because the MDO business operations have just started, and now once we reach the peak rated capacity only there is a jump in the improvement in the margins are concerned. O&M side, yes, there's a possibility of increasing the margins, but initial establishment costs will be there for the new projects to start in the current year also. So we in my remarks I mentioned that margins are expected to remain stable, but with a potential upside depending on the contribution mix from the mining segment.
Sir, in the 29,000 megawatt order to BHEL and 4,000 to L&T, so let's say 33,000 megawatt. In this 33,000 megawatt, how much of civil and balance of plant will be retained by BHEL and L&T, and how much has been ordered out, so that we come to know what is left to be ordered out?
So there are two aspects of BHEL outsourcing it. Now they have got some plants because they've got a huge order backlog and they see that limitation, some capacities, what is available, which they are using it anyway. Ongoing projects are also there, the old and finishing projects. Perhaps 3 or 4 projects they are planning to do the BOP as a subcontracting, the key areas in the balance of plant, that is coal handling, ash handling, civil works, balance of civil works, and some of the water packages and all. That is going to be there on a sub-EPC basis. That is expected to give a significant opportunity of about 8 to 10,000 crores in the market. But we are also looking at that opportunity. The second aspect, as you rightly asked, is the normal subcontracting outsourcing they do for the entire execution. That is, the civil, structural, mechanical, all those things. That the available, based on the available market order what BHEL has got, we anticipate an opportunity of about 30,210 crores in ETC orders and civil orders, and then structural work orders, and L&T is also has to subcontract main plant execution works and also balance of plant, and then some of the balance of plant works in civil, structural and mechanical works. Therefore, from the power sector itself, as far as our type of operations is concerned, there are two opportunities. One is the traditional business, what we are doing in civil, structural and mechanical works. That is around comes to about 30,000 plus crores, including L&T. And the new BOP concept, sub-BOP concept, which BHEL is going to implement it in couple of projects, that is expected to feature an opportunity about 10,000 crores. That is what we are aiming it, and that is one of the reasons perhaps will be bullish for the more ordering in the power sector this year. And that will also lead to more opportunities in the O&M sectors.
So how much is ordered out in this? Or this will yet to be ordered out?
I think it is a progressive phenomenon. What I can say is that at least about 60% of it they have to order it in these things. 60 to 70%.
My last question is, what is the scope of work in Kaiga 2 into 700 megawatt nuclear?
Yeah, Kaiga, it is the 2 into 7 megawatts, this one, extensive sector. The main work is in the plant civil and structural work for the turbine island.
Okay. And who's given you this order?
NPCL, Nuclear Power Corporation Limited.
And this is your first time order?
So, Nuclear Power Corporation is given to BHEL. BHEL is the
turbine island. So they gave the turbine island to BHEL, and BHEL gave you outsourced order.
Correct.
And this is your first time order, right? In a nuclear.
This is the first time we are taking nuclear because the type of work what is in the non-reactor side of the work, that is on the turbine side, turbine island is similar to a power sector. The same turbine island features are there. Therefore, we are quite familiar in doing the structural, civil, and then the turbine foundations and all those things.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Jainam Jain from ICICI Securities. Please go ahead.
Good morning, everyone. Congratulations on great set of numbers. Sir, firstly, I needed a couple of data points, starting with unbilled revenue, mobilization advance, and advances to subcontractors against work as of March 25.
Okay, you want the numbers, sir, breakup?
Yes.
1 minute.
Hello, sir. Are you there?
Hello, sir. Work in progress is 890 crore as on March 25. Mobilization given to subcontractors is 20 crore and advance to subcontractors is 200 crore.
Advance to subcontractor, sorry?
200 crore.
200 crores. And unbilled revenue is 895 crores, right? 890 crores. And mobilization advance?
Mobilization advance given to subcontractor from the clients you are asking?
From the client.
INR 240 crore.
Okay, sir. Okay, sir. And so, in terms of CapEx guidance for FY26, like last quarter, we had guided for 750 crores of CapEx in coming 2 years. So, how much are we looking to spend in FY26?
FY26, maybe around 500 crore we are planning, sir, both for washery and the regular CapEx together.
Okay. So, we will be raising that for that purpose. You have guided for 500 crores of debt addition in the last 2 years, for the next 2 years.
No. The total, it will not through entirely through debt. We have raised a QIP of 240 crore earmarked for the equity for the washery.
Yeah.
Initially, we'll use this money for the capex, and the debt will be added only limited, and most likely it will be added next year. 150 crore will be added in this year.
Okay. And sir, initially we had an order inflow guidance of 12,000 for FY25, and right now, as far as I understand, we have an order inflow of 6,400 crores. So can you highlight something on that part? Like, why have we missed out on that process with that thing?
So this year we are targeting around 10,000 crore order inflow, sir. We have closing order value of 14,387. So the another 10,000 crore we are proposing for, planning for the order inflow during the year.
Yeah.
So around 25% of the revenue growth we are projecting for the current year, so which is roughly around 42% of existing order. And the current orders also we can execute up to Q1, Q2, whatever the orders we received, we can also plan for Q3, Q4 execution.
Okay, sir. And is there any update on the mining business side, on the KBP mining?
KBP mining, the mining machinery has already been, equipment mobilization has been completed, sir, and OB removal also started from 15th of April. So they're likely to generate the coal production from Q2 onwards.
Okay, sir. That answers my question. Thank you so much, and all the best.
Thank you. Participants who wish to ask questions may press star and 1. I repeat, to ask a question, please press star and 1. The next question is from the line of Vinay from Hathway Investments. Please go ahead.
Yeah. Just wanted to know, the waterworks problem that you are saying, receivables, is that localized to only UP government, or is it a much larger problem?
So all these UP water projects are given under the Jal Jeevan Mission, which is the central government is very focused on the central government fund basis only. They have given these works to the UP. So UP also is contributing 50% of the fund. So due to Kumbh Mela works, they diverted all funds for the Kumbh activities. So they could not able to allocate any funds from the state side. And central government said Jal Jeevan Mission initially they have given timelines for 5 years to complete these projects, and which expired in November 24. During last budget again they extended for till 29 these timelines. So the allocation of funds supposed to happen in April, May, due to this present ongoing situations in UP, Pak and India issues and other things. So there is a delay in terms of allocation of this Jal Jeevan Mission funds. So we are hoping that now the issues are settled now, so probably they will allocate funds to state, and center and state both will allocate the funds now. We are hoping that this funds will be collected during the next month.
Yeah. My question was, is this only with UP, or do you have waterworks projects outstanding receivables from other places also, other states?
Wherever JJM funded projects, everywhere the 50% fund has to be allocated from the central side.
So it is the central fund that is pending, not the state fund.
State also, because UP, because of Kumbh Mela, they diverted funds. So now they are allocating funds now. So except the UP, the rest of the people, there is no problem. But there is 50% allocation is happening from the state side.
So if you can just tell us, from the unbilled revenue of 890 crores, how much is pending due to waterworks? You said 215 is for UP. For others, how many more?
No, we are executing waterworks only in UP. There are all.
So 215 out of 819 is for UP, for the waterworks.
Yeah.
Okay. Secondly, your order book for the year last year was how much? 17,000 something, right?
Yes, because there is a FGD non-moving order is there, that which we removed it from the order flow, and after removing that, it is 4,000 to 64. We have adjusted in the current order. And then after adjusting 14,387 is the actual running orders.
So that has reduced from 17,446 of last year, or what was the figure last year? Similar figure.
Yeah, 17,362 to 14,387.
Exactly.
Okay. And what percentage of your total revenue comes from waterworks?
Waterworks approximately around 10%. Last year it was 20%, sir. This year we achieved around 9%.
The total order value is 2,723 crores, and then there is another additional order of 699 crores on the O&M side. Now O&M has to pick up once the more connections are given, and the 273 crores that is the based on which yearly report comes, and we have completed around 1,864 crores for the last 2-3 years.
So this year we achieved around 9% of the total turnover.
Yeah.
Okay. Thanks a lot, sir. Thank you very much.
Thank you. We'll take our next question from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers. Sir, I wanted to harp upon the guidance for the next year. So earlier our guidance was 7,000 crores. Now you are saying 6,500. Am I right, sir? And what is basically, is it like the Jal Jeevan which is causing us to reduce this estimates?
No, sir. Actually, we planned last year around 10,000 crore order inflow. There is a inflow was reduced because of the last year due to general elections and other issues. So we could not able to get more orders, and in even power side also there is no much orders except last Q3 and Q4 we got the major orders. That impacted the order inflow, and now the existing previous track is that we are executing 40% to 45% between on the opening order value. So based on that, we revised the value to 6,500 level. And moreover, mining also, the offtake arrangement is not happening at Tasra because of the outside washery capacities are not available. So we are conservatively considered this growth of 25% because this year also we achieved only 25%. So in the same range of growth we have projected.
What is the order backlog right now, sir?
14,000 moving 14,387, sir, without MDO.
Without MDO, okay.
Yeah, plus 972 crore value of orders we received during Q1. So around 15,200 is right now in hand as of today.
About this total order book that we have, 53,994 crore, when will this be executed, the rest part?
Rest is remaining is the MDO order, sir. This is 25 to 28 years of period is there for the execution of the entire order. All two MDO projects are 25 to 28 years of contract.
Actually, there are two aspects of this backlog order. One is the traditional business, what we are doing. That backlog is about 14,387 crores. That cycle time will be, the pending order cycle time will be somewhere between 2 to 3 years, generally. That's why that 40% ratio comes for the revenue data. Whereas, as Arvind has rightly said on the MDO orders, for 2 MDO orders, that will has got a long duration period as a matter of mining and then selling the mine products to the coal, the coking coal to the customers. That has got a longer period.
And sir, this year we expect 10,000 crore order inflow.
Yes, yeah. That is based on the couple of developments. One is the huge order flow which has gone into BHL and L&T, and further orders are expected, on the power sector, because the government is keen to ramp up the thermal capacity to avoid the grid problems. Second is the perhaps expected this uptake which will come up in the infrastructure in railways, roads, and then some of the private sector investments also is expected to come. For example, Adani is making huge investments in power sector also, and then JSW is making investment. JSPL is coming with the investment. And then infrastructure, we expect the continued progress will be there. And that is why, because we had achieved, if you look at it, in 2023-24, almost 8,850 crores. Therefore, the company has got that wherewithal to manage those type of orders. That is why we pegged the order at 10,000 crores. Last year was an exception because of so many other factors.
Got it, sir. And sir, in terms of next year, that is FY27, what kind of execution do we expect here?
We are targeting 20 to 25% of growth, sir, next year also. 6,000. Roughly around 7,800 to 8,000 crores, sir.
Sure, sir. Thank you and all the best.
Thank you. The next question is from the line of Mudit Bhandari from IIFL Capital. Please go ahead.
Hi, sir. In terms of our MDO project, so firstly, whether our washery, which we earlier expected to complete in September 26, so whether that is on track, and secondly, our for FY26, what amount of revenue for both MDO projects would we be able to get? So I think earlier we said around 300 to 400 crores. So whether we will be able to achieve that?
Yes, sir. We are on track and we are targeting to complete the washery by September 26. So far, we have placed an order for 120 crore of worth of machineries which we ordered. Place an order and the balance also we are following. So the washery major equipment designing, so we already completed and LOIs are already issued to the vendors. We are targeting to invest almost 500 crore of investment during the current year itself, so that we can conclude, we can close the we can complete the washery by September 26.
Okay, got it, sir. And secondly, in terms of our debt, so you said we will not increase any net debt from FY26 25 levels to FY26. So we can expect that net debt to remain stable. Is that right?
Yes, sir. We are
on an overall basis.
We are focusing on the realization of receivables from the water division, and we want to reduce my working capital utilization. This year already I will utilize more debt than the last year. We will take the term loan for this washery. Maybe utilization will, for the time being, we'll use it from our LC facilities and working cap, LC facilities and equity funds. And next year, probably by end of this year or maybe next year, we'll use the term loan facility for the balance capex requirements.
Got it, sir. And last one from my side. So we said about subcontracting, sub-BOP work, which we expected to be a opportunity of around 10,000 crore. So I think earlier you were talking about core BOP project, which had around 50% of the total thermal power capex opportunity. So roughly, would you be able to give rank that what this 10,000 crore is, what percentage of total thermal power capex?
No, see, I told you as the traditional part of the business, both L&T and BHL comes to 30,210 crores. And then there is going to be some sub-BOP things which I am expecting as on today the reading can be a couple of 2-3 projects can be there because they have called the tenders for the Singareni also. Lukai they have already awarded for the 800 megawatt BOP. And now the Korba West has come, which BHL has taken at a value of 11,800 crores recently for 1320 megawatt. And that is where we are expecting another 10,000 crores on the sub-BOP opportunities, and it can go up also based on what the BHL decision takes place. But whatever is the balance which has been already taken up, and then the Adani portion of the orders, there is no construction which is done under the BHL. It will be done by Adani directly, and we are working on that. We are for about 4,800 megawatts of various ordering is in the process, and we have already taken orders from Adani for the new orders for the place from BHL as construction part of it. Therefore, L&T, they have to start the subcontracting work for their 27,523 crores of ordering. That should be expected in a couple of months. It should start. Therefore, BHL, it depends. One is on the BOP I told you, and then on the traditional business about 30,210 crores. That is what as of today we are keeping a track.
Okay, got it, sir. Thank you.
Thank you. The next question is from the line of Krupa Desai from Electrum Capital. Please go ahead.
Hello.
Ma'am, we request you to use handsets while asking.
Sir, my questions are already answered. Yeah, thank you.
Thank you, ma'am. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, ma'am.
Yeah, congratulations on the great result. I just have one question. So for the MDO project, what kind of projections are we giving for the revenue for next year? So previously we said around 300 to 400 crores of revenue for FY26. Are we still sticking to that guidance?
This year we are planning around 208 crore from the Tasra mine and 64 crore from KBP. Both together 272 crore we are projecting now.
Right. And this will be over the 6,500 crore of guidance that you've given?
Yes. Yes.
Okay. Okay. Thank you so much.
It's with the part of 6,500 only, ma'am.
It is a part of 6,500. Anything over this will be added to the guidance.
Yeah. Yes.
Oh, thank you.
Thank you. The next follow-up question is from the line of Vinay Nandakarni from Hathway Investments. Please go ahead.
Just one question on this. You are saying there's some ongoing order in Bangladesh. What is the size of this order, and is there any issue on that because of the disruptions there? And how much have we executed already?
No, Bangladesh, more or less, most of the jobs we have closed. There is not much to be done. And as on today, we are taking other look, looking at the situation. It's not so much this one prospective to go into Bangladesh.
So no receivables outstanding there?
Around 5 lakh USD is receivable is there. So the final bills are under process. So we are expecting to receive these bills also by this next couple of weeks.
Okay, and these are unsecured receivables, right? No LC backing or anything?
Nothing, sir. It's EPC, so regular construction receivables.
Fine. And just one observation. If you can just look at your India map on your slide 11, I think you should correct it.
Okay.
Okay.
Yeah. Okay.
Thank you. Before we take the next question, we would like to remind participants that you may press star 1 to ask a question. The next follow-up question is from the line of Janam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity again. So on the page 27 of PPT, we have excluded FGD order value of 43 billion. Can you please help me with understanding why have you done that?
See, the implementation timelines for these FGD systems were revised by the government of India time to time, and the regulatory approvals were also delayed. So, on the Ministry Power issued recently also some directives that effectively they extended the deadlines for its FGD implementation to the year 2029. So, because there is no non-movement of these FGD orders, and clients are also taking delay in terms of giving directions to us for execution of these projects. So we have taken after discussion with the negotiations with the company, so mutually we decided to remove the order book to the extent of non-moving orders are concerned. So around 4,264 crore order value of this Kawai, Tiroda and Mundra projects we excluded from the order value, sir.
Okay, sir, I got it. Thank you so much.
Yeah. Basically, Supreme Court has taken a decision because of so many factors were there, because of the complexity of issues in implementing new FGD orders, and one is the retrofitting, space issues, then power purchase agreement amendments, all these things were there, and then technology issues, outsourced, then supply chain. Therefore, they have extended. Extension is not the first time. Many extensions have taken place up to November 2029. And obviously, the developers who are having uncertainty on the power purchase agreement amendments, because discoms have to pay higher tariffs, governments are slowed down on this. That is one of the, they have to take conscious decision of discussing the
Okay. So the order has not been cancelled, but it has been delayed to for the next 2 years, after next year, right?
Yeah, it is. It can be revived, but as on today, it is not in our book, and we are all trying to settle whatever work we have done. One project we are doing at Udupi, that work is going on, 963 crores. We have done about 35-40% of the work. That will be done, but rest of the projects, as Arvind said, that is not there.
Okay, sir, I got it. Thank you so much.
Thank you. The next question is from the line of Dinesh Kulkarni from Finsight. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
Sir, thank you for taking my question. So my question is, as you mentioned, we are facing some issues with the water division. Do you think this is something like it's going to impact the industry as such in terms of receivables, or there are in terms of like order, not enough orders that you were expecting earlier, and this is going to persist for next few years, or this is like a temporary phenomenon? So what's your view on that?
It's a temporary phenomenon, sir, because of the timelines expiry. So the last budget has extended the timelines, and only they have to allocate the funds to these projects by the central government due to their ongoing issues with cost and other things. So there is a delay in terms of allocation of funds. Till the time the funds allocation happens, the client is not certifying these bills unless without the funds availability. So we are executing the projects, and almost around 350 crore worth of 425 crore worth of works already executed and pending for different stages of certification. Once the allocation of fund happens from both central and state government, they will release the funds. It's a temporary phenomenon.
Okay, sir, that sounds great. But your view, I would like to know more about in terms of the next 3-4 years. What's your view? Like, will the allocation of funds will be there to execute these projects, or do you expect a decline in the funds allocation itself? In terms of like, what's your in terms of division or in terms of industry, what's your take on that?
So this is the UP project-specific issue, and these projects almost we completed more than out of 3,000 crore, we completed 1,864 crore, and within a year we can complete these works. There is no issue. Once they allocate the funds, we can speed up the works and we can complete this in a year time.
But overall, Jal Jeevan Mission, this one status is that, they have reached almost 80% of the outreach of the functional house tap connections required for about 19.2 crores of households. Therefore, it is taken a good shape. That was UP was a specific issue. Balance 15 to 20%. I think this government is determined to complete it. Maybe another 1 or 2 years maximum.
Okay, but so we expect more work to come in this division, or like this will be a stable, there is no growth you expect in the specific division for our company itself?
As on today, there can be some opportunities because southern states there is some backlog of house connectivity for the drinking water. That we are looking at, in some of the southern states, and also Maharashtra, Andhra Pradesh, Madhya Pradesh, and then Tamil Nadu. That we will see to it as and when it comes, we will take it up based on our experience.
Okay, sounds great, sir. Sir, my next question is in terms of the capex, which you just mentioned that we'll be having somewhere around 500 crores for this year. So, but how do you expect for the next 3-4 years? Will it be these levels, or you expect it to come down once we have the MDO in place?
No, the every year regular capex will be around 80 to 100 crores year on year, sir, for regular business, and for the capex only specific activity where we are planning to raise around 450 crore term loan. Remaining balance, we have QIP funds are available. So 450 crore debt addition will happen in next couple of years.
Okay, sounds great. And sir, my last question, maybe so I just want to know what in terms of management, are we expecting any succession planning in terms of increasing the bandwidth of the management? Because I know we're doing a lot of work. So anything on those aspects?
The MD son present, who is Rohit, President BD, he is only handling right now the operations of the company and the major business development and admin and HR. So other new areas of activities which is trying to get new line of activity as a strategic business. So we want to induct him into the board. Maybe in the next couple of weeks, we'll decide and we'll induct him into the board of directors.
More than that, we are also strengthening our organization, overall organization. Of course, that is on the main thing what Rohit will take the lead role. He's already doing substantial work on operations, business development, overseas operation is completely looking at it. And he's looking at the routine aspects also and supporting to CMD. But organization growth is there because of the new opportunities that come in the infrastructure and power sector. We have taken some senior level people also. And there is a substantial augmentation in our manpower resources, both in our own regular manpower and the subcontracting manpower. What was about 34,335 headcount, including Power Mech, and then the subcontracting labor has gone up to 37,295 by April 25, an increase of 8.6%. And then O&M, there is because of the improved order backlog and all, the manpower headcount in O&M has gone up from 40,069 to 18,296. Therefore, parallelly, the organization strengthening is also going. Some reorganization also is going to keep up to the customer requirements.
Okay, so that sounds great, sir. Maybe last question from my end, sir. See, we are seeing a lot of things happening on the defense front in India, with whatever we have witnessed in the last couple of weeks. So, do we expect to do anything on this in this industry, in this segment, from the company's perspective?
I think defense is a little bit of, as you know, it's a high-end technology and a lot of technology input is required, and that focus is not there. What we are now focusing the new energy businesses like battery energy storage and solar power. Certain projects we are looking at it because battery energy storage, government's plan is to ramp up the capacity to 50,000 megawatts by 2030-32. There, we want to see as a developer and certain opportunities we are also looking, and solar power also we are looking at as an opportunity, as an investment also. That is
okay, so any inorganic path we are looking at, any acquisitions and stuff like that?
No, right now there are no opportunities, sir, but non-power O&M side also we are looking at. As of now, we are more concentrating on the power O&M. Large conglomerates and PSUs are also outsourcing O&M of metros, material handling systems, process industries, and airports, creating a more high potential opportunities are there. We are looking at this space also to get more O&M.
Okay, so you expect next phase of growth from O&M itself, right?
O&M and non-power side also we are majorly.
Non-power we are already working in certain
sectors. Division we are working
like NMDC, JSPL, RIL and GMDC. And then water project, for example, UB water project also has got is a non-power segment. It is also has got our 10 years O&M. It is built into the system, which we have started as and when it gets commissioned. And then one of the areas we have entered is the township construction also. Recently, we have taken a 972 crores from the Telangana Generation Company for the project in Telangana. Therefore, that is a new initiative we have taken.
And there are a lot of international infra opportunities also there, sir. Middle East, particularly Middle East, Africa, infra investments. They open up overseas ETC or O&M project potential. Especially through local JVs, we can look at those opportunities also international level.
Okay, sir. That sounds great, really. Thank you very much and all the best.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thanks for the investment team and also our team here. I think the key takeaways are that, the company is looking for expanding the business in O&M infrastructure, and then the new opportunities just come in the power sector, both for the new installation, BOP, and one of the new initiatives is the balance of plants, undertaking complete jobs. That is because of the in-house strengths we are having in execution, to give some substantial value addition to the company's operations. And then to more focus on the Middle East, because the investments are expected to come up in Middle East for the energy sector, which was just down. Now, particularly in Saudi Arabia,